My mother said, don't be afraid of getting in front of the camera. So I understand this will follow me around. So we're going to see if we can do the magic here. But I want to thank everybody for having us today. And I say us, Drew Pearson, standing over by the wall, is our public information officer. And he is here with me today. Drew is relatively new to the division. Again, we're the Division of Insurance, part of the Department of Business and Industry. We are one of 13 agencies. I think it's 13 agencies within BNI. But we oversee the insurance part of things in Nevada. I'll give you the quick elevator speech and then we'll get right into talking about wildfire. We regulate a $25 billion industry in Nevada. To kind of narrow that down, that's about $1,000 per man, woman, and child in Nevada each year. It's a big business. There's a lot of work. We have over 60 chapters of the Nevada revised statutes in which we have to enforce. And we have everything from soup to nuts, as you would guess. Certainly the obvious ones: life insurance, health insurance, homeowners insurance, fire insurance. We also do surety bonds. We do bail bonds. Just about everything that has to do with insurance or risk management. We have a great staff of 88 FTEs. Very proud of the fact that over the course of the pandemic, as you know, state government was pretty well impacted, and we lost a whole lot of very competent and capable people. When I took over, and this is my third time as commissioner. I was here in 2009 and 10, came back in 2011 through 15, and started again back in March of this year. And when we started in March, we had a vacancy rate of 25%. We had over 20 spots to fill, and we are busy, and we couldn't afford 20 spots. Right now, I'm very proud to say that we've got that down to 2 vacancies. We've worked very hard at filling those chairs, getting these people a very capable professional group of state employees who have really bought into our mission. Our mission, twofold. One, we want to make sure that companies are solvent enough so that when time comes for them to fulfill the promise that they've made to you through your purchase of a policy, that they have the money and the wherewithal to pay those claims. And we only have to go back about a year when Friday Health Plan went insolvent. Friday Health Plan was in a number of states, 8 of them, including Nevada. Nevada was one of the first canaries in the coal mine that spotted what was going on, and we moved very quickly to protect our consumers. Very happy to say that the company has been liquidated, and almost all of those claims that consumers had on their health insurance have been paid. No less thanks to our terrific staff. And the second piece of our mission is consumer protection. We're the ultimate consumer protection agency when it comes to insurance. That's why we're here today, is to share information and make sure that if there's any challenges that you have that we can address within the 60 chapters of the Nevada revised statutes that we can have the opportunity to use, we'll do it. One last piece of the elevator speech. We have 2 pieces. We have about 1,500 licensed insurers doing business in this state. And we also have about 260,000 licensees, producers, brokers, agents that we license. About 20,000 of them, a little bit more, are residents of Nevada, and the rest are what we call non-residents that can operate in the state of Nevada, but are not residents. We have a big job of making sure we keep all of this stuff in line and under control. Let's get to the issue here today. It's fire insurance, cancellations, non-renewals, cost of insurance, and a lot of those associated things. Under the Nevada revised statutes, insurance carriers have the ability, if they give consumers enough notice, to cancel or non-renew their policies. Don't like it, but that is the law in the state. And as a matter of fact, that's the law of the land. That goes coast to coast, border to border. That is the way the insurance world operates at this point. Now, we changed a little bit that about 10 years ago. We passed the Affordable Care Act, and we were very interested in making sure we at the division at that time had the ability to oversee the health insurance piece. And that particular piece of law now says you can't be canceled. No matter how sick you are, if you have a policy and you pay your premium, you can't be canceled. Not the case with property casualty insurance. So we're working on that. It's working. And the other piece of this is when we talk about premiums, and is the division does have oversight on the premiums that insurance companies charge for homeowners. And we'll talk about commercial habitational in a little bit. That has to do with condos, apartment buildings, homeowners associations, and so forth, and common interest communities. But I think the focus today, I want to spend more time, is on the homeowners piece. We have had, in fact, we had 2 meetings today. I was dealing with the staff, and we were talking about, forgive me, I need to cool off a little bit here. We were talking about the range and how companies ask for rate, what they're doing, and how long it takes us. Why are they asking for what they're asking for? And this is kind of a regurgitation of a lot of what we've been talking about over the last 15 to 18 months. Where are these rates coming from? What are they asking for? How are they asking for it? What are they basing it on? I'll give you a quick primer on all this. Most rates, let's go back about 5 years. Policies we were getting a request from an insurance company maybe once a year. And we would look at that, and those rate increases kind of in line with cost of living or general rate of inflation. 3, 4, 5%, much easier for us to review. And again, we have what we call prior authorization, but that's a health term. We have prior approval. So for an insurance company to sell a policy in this state, so State Farm wants to sell a homeowner's policy, they have to send that to us. We review it for compliance with Nevada law. And then once that's done, they submit their rates. And our actuaries review those rates up, down, and sideways to make sure that there's 3 standards we use: not excessive, not inadequate, and not unfairly discriminatory. That's actuarial speak, but basically what they're saying, we want these to make sure that these are fair. In fact, in some health insurance opportunities, we've actually turned down a rate decrease because we were concerned about the company's financial wherewithal, that they weren't getting enough premium. They were trying to submarine and undermine the marketplace by having a cheap product by business, and then we would be challenged because they don't have enough money to pay their claims. So that's what we look at when we review these rates. Now let's fast forward from 5 years ago to now. We're getting 3 to 4 to 5 rate change requests from carriers every year, which is a little overwhelming for our staff. In fact, what we've done is we've brought back a retiree from our organization to help out with this process now, and we're in the process of getting more money from the ability from the legislature to spend more money to do this. So this is very, very important for us. We were talking about this today. Some of these rate filings taking a little bit of time. We push back hard. I'll give you an example. We got a rate request not too long ago for a 23% rate adjustment up. 23%. Back and forth, back and forth, back and forth over the course of 6-7 months. And we got them to agree to 9%. Interestingly, Nevada is one of the most profitable places for homeowners insurance companies to do business. We've not had any fires. We've had very few natural catastrophes. Very few. We had the Collin Ranch fire. Do you remember that? That was in 2011. In fact, personal story, I had just moved back to Nevada to take the job. Had a home that I was renting in Collin Ranch, or near Collin Ranch, on this side of, not the nice homes. I'm a state employee. It was a pretty good home for me. And went to bed. They had just dropped my furniture off. Got to get out of here. Fire. So I leave, come back it was about 2:33 a.m. Fire had come through. My new best friend, my neighbor down at the end of the cul-de-sac, was out putting out the fire. His fence had caught on fire. So I went and helped him, and got to be pretty good friends. Down the hill from me, about 7 or 8 homes, or 3 in a row, were gone. So I think the Collin Ranch fire, and maybe there's one other that have been more catastrophic in Nevada. But it just doesn't happen here. We don't have the Lahaina's. We don't have Paradise. It just doesn't happen here. And that's why we push back, because these companies have been profitable here. And that was kind of the subject of one of our meetings today, is how do we control this narrative? How do we push back on these insurance companies that are coming in and saying we need a 23% rate increase? And oh, by the way, if we don't get it, we're leaving. Now, they haven't said that. They've inferred that. I was interestingly enough, talking to a broker down in Las Vegas last week. The company that she has repped for 20 years is a company called, I probably shouldn't mention it yet because I don't think it's official, but they are getting out of the property casualty business across the country. The company was bought by a venture capitalist or venture capital entity, and they are getting out of the property casualty business. So they're getting rid of their automobile, they're getting out of their homeowners, they're getting out of their commercial business. So I was talking to her about what that meant for her. She said, well, I have a very nice book of business. She got about, I don't know, 5,000 policies. She's got about a $7 million book of business. And she's worked extremely hard to get to this point. And she said, I'm trying to place them with about a half a dozen other companies. And this is in Las Vegas. She said, I'm having a devil of a time finding a carrier that'll take even 1 or 2 of these. He said, they just need more rate. I said, what? We don't understand that. And they've been saying this for months and months and months. We keep pushing back on this issue. So You get the long story, several long stories short, but we do push back. We do have rate oversight. Now, what's happening to drive what you're seeing and what we're seeing? Thanks to our friends in the West, to the North, New Mexico, even Texas, Florida, Louisiana, North Carolina, Oklahoma. You can go state by state. The list of and the depth of natural disasters has impacted everybody. It impacts us here in Nevada. We are seeing companies react, and more importantly, we're seeing reinsurance companies react. Reinsurance, just exactly what it sounds like. It's insurance that insurance companies buy to back them up catastrophically. Think Lloyd's of London, think Allianz, Swiss Re, General Re, all of those companies will work with state farms, all states of the world to back their products and back their solvency. So in the event there is a catastrophic event and they're significantly impacted at the bottom line, that these reinsurance companies will step in and make those claims good. What we're seeing is because we've had such a series of natural catastrophes around the world, the cost of reinsurance is exponentially increasing. And that trickles down to each one of us. That's part of the rate increase request that we get, is the cost of reinsurance. And I mentioned the fact that we, are proximate to our neighbors to the west, and they haven't had the best of history. They haven't had the best of experience, and so they've been challenged. Insurance companies will look at places like ArrowCreek, at places like Montreux, places like Incline Village, west side of Carson City, Washoe Valley, Minden, Gardnerville, up and down the Front Range. Elko is another area that's significantly impacted. And they look at us and they say, you guys in Nevada, if we didn't know where the state line was, you look just like they do. You got trees, you got combustible material, you got slope. So tell me why we shouldn't charge you the same as those high-risk people across the border. So we got that challenge that we have to work with as well. I will say, and I appreciate our fire professionals that are here. You guys have done a tremendous job in keeping these communities safe and prepared. We appreciate you more than we could probably share, but you guys have done an awesome job, and we look to continue to partner with you as we continue to work through some solutions that we've got in mind that will get us out of the spot we're in. So before I start talking about solutions, what we can do, not only as the Division of Insurance, but as what we can do as the state of Nevada. Are there any questions so far? Yes, sir.
Skip that. I'll try to talk about. But what was the division doing to try to avoid
undercharging insurers? Not allowing needs to be the state or less. Some of the insurers that we represent, let's say we use 10% for every policy itself. So is there such a benefit by allowing increases that are excessive? Do you feel like the division is navigating that for people that
Great question. And a little bit of history. California passed, I think it was Prop 103 or 105, about 10 years, no, about 25 years ago. That said you can only raise your rates on insurance, I don't want to say 10% a year, but it might be 5. And they are still bound by that. So, 5% in a real challenging environment in which they have, just ain't gonna get it. And that's why State Farm has non-renewed 72,000 policies. Farmers is retreating, all states retreating, and they're not writing new policies. So not only canceling, but they're not taking any newcomers. We don't have that situation here, thankfully. Now, the proposition was passed by the population years and years ago. They had a significant insurance. You're taxing my history recollection, but they were having a significant problem with auto rates, I think, at the time. And this was designed to kind of put the cap on auto rates, which it obviously did, but now it has created a problem that they cannot get enough rate. I know the commissioner over there is working very hard on this issue. He has got some real challenges because the framework in which he has to work. I know that there's a regulation that they're working on. I'm not sure if it's an emergency regulation or if it's simply just a change in the way they're doing business, but they want to be able to look at those rates the same way we do. And if a 25% rate increase is merited because their loss ratio, which is what they're paying out in claims versus what they're taking in premiums, if their loss ratio is 120%, they can't stay in business. They're losing 20 cents for every dollar they take in. Not a profitable solution. So great question. We watch what's going on over there very, very closely, but we don't have those restrictions. Thank goodness that's taking place in California. Anything else? Yes.
Yeah, thanks for coming. Thanks for coming this evening. Tell us about insurance. Well, my question is, you have to as ArrowCreek. After that, not state law, but look here about our community and what I'm concerned with, and what I understand. How many people have their insurance? Okay, here's one. Okay. And how many people have that? I'm asking, if you know, statistically in ArrowCreek, and what's been the average increase premium? So maybe we can measure what's the impact for us, correct?
That's a great question. I appreciate you bringing that point up. Kind of a long answer, so stay with me. At the end of 2022, the division put together what they call a data call. And we queried every company that was writing homeowners business in the state. And we asked them where they're writing, what they're writing, what the insured value is. We asked, have you canceled non-renewed policies? We did the same thing at the end of 2023. I mentioned that commercial habitational, the HOA. We just did another data call just focused on that. But for the homeowners, those two data calls told us a lot. What's going on in statewide, but we narrowed it down to the areas around the Lake Tahoe Basin. That there was only in 2022 a little over 200 cancellations. Oh, across the state or in this area? Two hundred And I'll have to I'll have to look at the exact numbers. I think Incline Village has roughly 7,500 insurable dwellings or businesses. So if you kind of spin that around, we're probably about 15,000 between ArrowCreek, Montreux, around the lake, down. So about 200 out of 15,000. The end of 2023, that number had gone to 416. Now, we anticipate when we do this again at the end of this year, that number will be significantly higher. We're hearing from insurance companies that have notified us that they're going to non-renew a couple thousand, one company up at Incline. I'm sure that some of that will trickle down here. Part of it's because of the fire risk. Part of it is that their reinsurer has told them that they have too much concentration. Too much concentration. You got 6 houses on the street. One company insures 4 of them, and all 6 go up in flames. That's a significant event for that one company. That's up to the insurance company. Question was, how does, out of those 6 or out of the ones here, who decides whether an insured peril gets kept by the insurance company and which ones do they non-renew? Did I capture that right? And the answer is it's up to the insurance company.
If you get canceled, does the insurance company have to provide either counseling for medical things or just get their money?
Good question. The answer is you don't get it. You don't. There's. I wish I had my expert here. There is. I think there is a reason that you're supposed to get, and whether it's just the fact that they're retreating out of the marketplace and you're a victim of that concentration issue, or the fact that you just live in a place that's steeply sloped, poor access, no fire hydrants, shake roof, trees under the eaves. So you become a fire risk. And you mentioned mitigation or defensible space. And what I'd like to press, just kind of bookmark that because I want to get back to that and talk about that because that's really, really important for what's going on here. Yes, sir.
Well, if you were canceled and for policy, is there a web portal or
some assistance that have on that to know what our options would be for insurance calls?
Great question. I don't know if you heard the first part of the question, but what can be done? What has the division done to assist those who have been non-renewed or canceled? Out of these data calls, one of the things we ask is who's still writing? Who is still looking at applications and considering them? We put that list on our website. It's doi.nv.gov. In fact, I looked today just before we left the office for 89511. There are still 40 carriers that have indicated that they're writing. That list is on our website along with contact phone numbers. One of the things we recommend, I'm sorry? Certainly, again, the website is doi.nv.gov. So Division of Insurance.nevada.gov. And it's right on the front page. Can't miss it. I just looked at it. And I'm kind of a neophyte when it comes to technology. So it's there and we looked at it today. Also, what we're recommending with the consumers, and this is for everybody, not just those who get canceled, but when time comes to renew your policy, shop around. But we're encouraging consumers to work with a broker or a producer in order to find coverage. Brokers are affiliated with a number of different companies. You know, your State Farm agents or Allstate agents, they are what we consider captive insurance agents, and they only can sell for State Farm or for Allstate or whomever. But brokers that give you a, you know, may have 6 or 8 or 10 companies that they represent. And they should be able to track down companies that are doing business in your neighborhood that would look at your home and say, yes, we'll underwrite this. And if you don't get a suitable answer from your first broker, go to a second, go to a third, go to a captive. Keep going. Because we've heard from some consumers that say, well, I went my broker. He questioned 8 companies and none of them would write me. But that leaves 32 in this zip code that you haven't talked to. But keep going, keep going. If you have questions about that, there's some contact information for the division on the website. Reach out to us. We'll love to have you speak with some of our consumer affairs folks, and they can provide, I think, pretty good assistance for you.
Commissioner. Yeah, Zoom question.
I'll give you a Zoom answer.
Homeowners, whose measures require insurance, that the homeowner can obtain a new insurance.
It's a great question and kind of gets back to what we were just talking about. You know, go shop. Now, we are also hearing that carriers may be on that list, but they're only going to consider 2, 4, 6 applications a month. Like I'm visiting with a broker, not a broker, a government affairs person from a large carrier tonight. And we're going to have this conversation because we're hearing that that company is only considering 1 application per broker per month. That bothers us. And we want to get to the bottom of this. Again, Nevada is a profitable place to do business. In fact, we looked at all the Western states. Nevada is the most profitable. For the last 10 years, companies come here, they make money. There's no losses compared to other states. So this is our challenge. Yes, sir.
So if that's the case, are these insurance companies using their losses in other states for multi-rate here? Why not have a Nevada develop a regulation that there's your rate based upon losses in the state?
Great question, and we do look at that. We do take a lot of that into consideration when we review those rates. We look at that 23% that was applied, that we got them down to 9%. The 9% probably reflects certainly part of the risk of living in a fire area. Part of it has to do with inflation, which has been significant over the last 3 years. Now, thankfully, it's coming down. The increase of cost in repair or replacement. Price of wood gone through the ceiling. Bad pun, sorry. But, you know, we look at those things, and that is a great question. And that's one of the things we wrestle with on a regular basis with these carriers. And again, my senior leadership team probably collectively has close to 100 years of insurance and regulation experience. And we can't quite understand where this market is going. You know, even with the data calls, even with conversations with not only the national trade associations that represent insurers, but with individual insurers. We're saying, what's going on? What are you guys doing? What are you looking at? Well, we need rate. We need more rate. They said, well, you haven't had any losses. Well, yeah, but our models tell us that we need more rate. Let me talk about models. Yes, sir, before I go there.
with the, you know, I understand. But sometimes that can be felt.
That's a great, yeah, they're all great questions, but that's really, thank you. That's appropriate. Question is, what's the pulse of the industry? What's going on, especially with the big carriers that have significant market share in our state? Knock on wood, they have not indicated that they're intending to leave if they don't get rate. I think this is public information. We put up our rate requests on our website. State Farm has not requested a rate increase in some time. USAA, similarly. We had a meeting just 2 weeks ago with CSAA, which is the AAA insurance company. They're looking for rate. It's kind of related to models, so I'll keep that in mind as we go through. But in answer to your question, what we're seeing in the pulse of the company, the big guys are good, most of them. Some are skittish, and to date, knock on wood, nobody has indicated to us that they're leaving the state or withdrawing, except for the company that I mentioned that is canceling all their property casualty insurance business across the country. So I think we're still safe. I think you would. Oh. Good question. Probably get tired of me here saying that. What are we doing at the division to address the increase in rates? And what are we doing to make it available? Those are the two questions that we have to deal with: affordability, availability. Availability, we are constantly working with other carriers to come into the state to do business. My fear is most of these are small to middle-sized companies that will come in and they may take 10, 15 policies. They may take a few more in Clark County. We're working to make sure we expand availability. We're working to make sure that State Farms, the USAAs, all states of the world continue to see Nevada as a place where they can, it's a good market and they can do business. The affordability piece is one that we, again, kind of went through what we do, look at those rates. There is part of the rate, and I wish our actuary was here, but it has to do with territoriality. And if you were living in a area like this that might be fire prone, you're going to get a bump in the rate. That's just the way insurance works. I wish I had a better answer for you of what we're doing. I don't believe that the legislature, and I don't want to speak for the legislature, I don't speak for the governor's office, I can only speak for the Division of Insurance. But as far as setting up a fund, an affordability fund, probably is not something that's going to happen. Now, I think you had a question here. I'll give you my microphone.
Okay, my question is, when an insurance company looks at, say, somebody in ArrowCreek,
what area are they including in that? Are we lumped in with a Klein Village because we have a zip code, or how do they define it? And who are we lumped in with?
It depends on the company. Some companies take a little bit broader regional look. Some companies will look at the zip code. Some companies will work down to the street address. It just kind of depends upon the company on what is looked and how you're lumped in and how you're evaluated. Now, I was going to talk a little bit about models, and I think this might be a good spot for that. Insurance companies over the last 25 years have started using models and modeling to help them predict what's going to happen. It really started bearing fruit in Florida with all the hurricanes that they've had. Insurance and risk managers felt that they needed a better way to predict what those losses were going to be. So they got with some other professional entities. These are not affiliated with insurance companies. They are other entrepreneurial entities. And they develop models. They look at the history. They look at, where the hurricanes have gone in the past. They look at the types of buildings that are there, how far from the coast they are. If there's, if there's a place where the storm surge can come right up your street, or if there's some place where it would break it up. And they developed models over the years, and companies use these models to help them predict when these storms will come and what the losses will be. They know what the losses will be, then they can predict or, set a rate. Now, about 3 or 4 or 5 years ago, started getting in vogue to make those same models, and let's apply wildfire to them. So that's what we're in the middle of. Companies have to file with the division how they intend to use these models as part of their rate setting program. There's 2 types of models. One is the one I kind of referenced with the hurricane. It's called catastrophe modeling. What are the chances we have a catastrophic fire somewhere in Nevada? And they can break it down by zip code, area, county, you name it. And then the other one is a risk score, which is specific to either a zip code or even a smaller area. And if you have a risk score and you come in and look at your property and say, well, you've got wooden fence, shake shingles, you've got juniper trees all around your house, you've got those cedar trees that go right up into your eaves, you got wooden eaves, you're not covered, you have no screens on your openings to your attic, you have no screen on top of your fireplace, you're gonna get a pretty high risk score. If you do the mitigation, if you do a review, then you should get a lower risk score. If you have, done all of that good work, you should be given some credit. Now, to my knowledge, there's not an insurance company that is giving credit for mitigation in the state of Nevada. Not one. Now, can we as a state legislate that? Yes. Does it make sense? Well, there's the question. Because we're a state of 3.3 million, maybe. Our neighbors to the west have put this in, and not very popular. Carriers have indicated that they're no longer writing. This is one of the gentlemen over here mentioned about, you guys are doing a pretty good dance and kind of threading the needle on this. These are the things that we have to take into consideration when we, make these recommendations or decisions and tell our legislators or, the executive branch, that we think this is something you should consider. So we have to take that into account.
But it really sounds like we're subsidizing
6 or 8 states that have the worst insurance law.
Yep, the question is,
Do, as the insurance commissioner, to tell the insurance companies, hey, Nevada, it's over, not California, not Florida, not Oklahoma.
and the question is, what are we doing at the division to make sure that Nevada isn't subsidizing everybody else in the West or everybody else in the country? Let me give you a little bit of insight with that. The cost of reinsurance spread across the entire country. So State Farm is paying for reinsurance. They'll pay the same rate in Nevada that they're paying in Illinois, that they're paying in Iowa. There's not much we can do about that. We look at the profitability of a carrier. Again, mentioned that we've been very profitable here for companies doing business here for the last at least 10 years. And we look at that when we review these rates. Can we do more? We push back. We push back hard. We've got one filing. And I'm not proud of this because I don't think this is the way we should do business at the state of Nevada. But we had one filing from a major carrier that has been in our process for over 2 years. 2 years going back and forth, back and forth, back and forth. And it started at a 9% ask. Now we got them down to around 4%. Now, think about that. We've gone back and forth for 2 years in an area, a time of fairly high inflation, to talk them down 5%, which has been already absorbed in the rate, should be absorbed in a rate that has to do, dealing with the time value of money. So we may approve this 4% eventually, and they're going to turn around. And if I was running the company, I would turn around and say, look, you just cost me at least 10% that I thought I needed, 5% last year, 5% the year before. And we got inflation coming up, and we got higher cost, and we got the probability of a fire. So now we probably need a 20% rate increase. Now, is that the way we should be doing business? I don't think so. But we're going to work at it. We have to improve our process. But in the answer to your question, I don't think we're subsidizing any more than the cost of the reinsurance. We look very closely at their business in Nevada, what they're insuring, what their assumptions are, and what their actuaries are telling our actuaries. And we look at those very, very carefully. Kathy.
I just have a question. We talked about this. The fact that we in ArrowCreek, we spend quite a bit of money reducing fuel. We also need to raise for the space evaluations for 1/5 of all homes every year. And we're in our second round of 5 years because, of course, people move and plants grow. But so we do flexible space evaluations and give a longer report. They should do recommendations. We also spend a lot of money on people, but we're also a fire adapted. We're a firewise. And the firewise community, it means that we have to report to this particular website how much we're spending, what we're doing, how much volunteer time, etc. And I understand kind of how you do that with the insurance companies, but not everybody is a firewise. So when the insurance company look around the network and see what communities are firewise, and could they then look at maybe some kind of recognition?
They could. You are absolutely right. They could. I think until they're forced to, or until we get a critical mass that are going to get to that point and say, those folks at ArrowCreek really know what they're doing. They've not had any fires. They have great access. They've got fire hydrants where we need them. They've cleaned up the underbrush. There's not a bunch of combustible material laying around, maybe in these addresses, we should give those folks a bit of a break on their premiums. We will help you. We're working on this. But again, we have no authority to force them. We can talk to them and say, there's areas here you really need to think about. And the folks at Incline Village, I'm sorry to cut you off, but the folks at Incline Village have also done just a terrific job up there as well. And they probably have a greater propensity for a bigger challenge than you do here, just because they're in a much more wooded area, much more steeply sloped area.
What can we do? What can we do to help you? I mean, do we get a hold of the governor, right? What do we do?
That's a great, I think a great idea is to start managing up. I try to do that in my job, but manage up legislators, city councilmen, county commissioners. Start with them and let them start putting the pressure on. They'll put the pressure on us, and we'll see. We'd be happy to do what we can do. We work very closely with our carriers. We obviously speak with them a lot, not just on the rate side, but on the policy making side as to what's the best way for us to move forward. So I think that's a great idea. Sure. The question is, why not the division? Why not the commissioner be the advocate? Yeah, I wish I could share, I wish I had the number in my head as to how many hours, how many conversations we've had in trying to figure out solutions to this. We've talked about a number of things, and we are advocating for a number of things. One of them is the development of a California style fair plan. In other words, it would be the insurer of last resort. So if you're turned down by Allstate, if you're turned down by Farmers, then you could go to the fair plan. They have to give you a policy. Now, it may not be at the rates you're paying now. It may not be the deluxe coverage that you're used to. We don't have it. Never have had it. It's going to take the legislature to do it. I'm sorry? That's not what I said. The legislature meets here every 2 years. We just made a presentation at the Interim Commerce Committee on the 31st of July. And one of the things we spoke about to them was the development and the design of a Nevada-style fair plan. But it's going to take legislation to get something like that done. The wheels are in motion. I think there's a lot of smart people who are talking about this at a pay grade higher than mine. So I think we'll see something coming up in February in the legislature to design and develop a fair plan. How's that?
Okay, you talk a lot about lower rate, and it's not necessarily about lower rate. So you have to look at what the insurance company is because they're going to have a real tendency to really underinsure you. You might have a lower rate. If you have a fire, you get your call. You could burn the wind up paying $300,000 or more out of your pocket, thinking you're fully insured.
Right.
So you have to look at what you're being insured for. And I just went to my insurance carrier. I said, you fit the matrix, and that's what you pay. I said, I'm out of the matrix. I want to pay more, so I have more coverage. And created a lot of it.
They did or did not?
They did.
Okay. That's terrific. And I think you should do that annually. I think it is imperative to understand what your policy has, what it covers, and then what it doesn't cover. There's some tools on our website to address just that. And one of the things we encourage consumers to do is a home inventory. Take a camera, take your phone, walk through the house. Here's my books. Here's our art. Here's my computers. Here's my television. Here's what I got in the garage. And have that in a separate place, not in your home. So in your phone, in your laptop, take it with you. And have that in, so that if there is ever a claim you need to make, and the insurance company pushes back on you and says, well, I don't believe you the value of the art that you're claiming. You say, it's right here. It's right here.
Realize the land is,
Yeah.
you can subtract the dirt.
So you talked about legislative solution for us. Who would you recommend the bill sponsors? Who would be charged with this or something? That is something we could work on.
Sure. I don't want to put individual legislators on the spot.
It's okay with us.
I understand. And you probably know who your legislators are here. I would start with your local representation. We had our presentation in front of the Interim Commerce and Labor Committee, which is composed of both Senate and Assembly people. The chair of the Interim Commerce Committee is Senator Spearman from Las Vegas. The vice chair is Assemblywoman Marzola, also from Las Vegas. You can look it up, I would give you the list off the top of my head, but I don't want to forget any Northern Nevadan members. But I think Assemblyman O'Neill, PK O'Neill, is a member of that particular group.
When I came to Nevada, I remember hearing the third one after the state.
Yep.
You haven't said a word about it, but you're the only possibility. We've seen warnings on it and several locations. What's your opinion about how that factors into our insurance costs, what insurance, what we should do?
That's a great question. I can't tell you how much I appreciate not talking about fires anymore for the moment. Earthquake insurance, it's a really important. Just as an aside, in one of my prior jobs, I worked for the National Association of Insurance Commissioners on the staff. And one of our committees that I staffed was for the North Dakota insurance commissioner. Long story, fast forward, Mr. Pomeroy became the executive director of the California Earthquake Authority. Still lives in Sacramento. Still talk regularly. He, as you would guess, really advocates for earthquake insurance and how important it is. We agree. We have probably more of a chance of an earthquake here in Northern Nevada than almost any other state in the West, except our neighbors. Just as an aside, I'm reading a book called The Annals of the Former World, and it has to do with geology and the way things are designed along the I-80 corridor. The author is fascinating because he starts in New Jersey and works his way west. Talks about the Great Basin, and right now I'm in a chapter in the middle of California. Talks a lot about earthquakes and how challenging they are to manage. So I would encourage everybody to look at it. It's not very expensive as an add-on to your policy. You got to talk to your agent, talk to your broker about adding that particular coverage. Very important.
I just want to go back to losses. I was just canceled like 3 weeks ago. So I got till September 8th.
Who are you with?
time with farmers.
Okay.
And they said, and I questioned, exactly why are you canceling these? They said, well, you live in 895.1. I said, well, a lot of people live in that. Are you telling me as a real estate agent, I shouldn't sell a house in the 89511 area because they won't be insured? I said, no, you were selected for some reason. I got a 50,000 gallon pool in my backyard. I have full space. Why me? I don't know. We'll find somebody else for you in a few weeks, but who is that going to be?
Yeah.
So I went on my own, and I've already gotten 2 bids, and of course, they'll take me in a heartbeat and at a lower rate. So how can that be? I mean, how can you say I'm in this model and say I'm in zip code, but 2 other companies will take me at a lesser price?
Welcome to the world of insurance. Unfortunately, that is not surprising how this works. But I'm so glad that there were 2 carriers to step up right away at a lower rate. I'll ask you later who those 2 carriers are, but I think there's fire away.
One is AAA, they had the lowest, and then the second, the State Farm.
Okay. 2 very prominent, but I think that's great. You may be the poster child for how things are supposed to work or should work.
So I want the top dollar for my house. But I think you really have to look at that replacement cost. Looking at these different companies.
A savvy purchaser, take lessons.
I want to ask you that. You're looking at every one's always and when the fire insurance really come down to everywhere that the insurance industry is not insurance. State insurance departments are working to develop.
That's a terrific observation. I will talk to the Division of Forestry and see if they have maps that might indicate where there's a propensity for fire, because I think it brings to mind something we had a great experience with. My chief deputy and I went to Boise in April and attended a seminar at the National Wildfire Control. Anyway, they train smoke jumpers. They oversee, and this was put on by the Insurance Institute for Business and Home Safety. And what they, as part of the presentation, they built 2 small sheds with a window right next to each other. On one side, they built one that was fire resistant, hardened roof, defensible space, wrought iron fence. Right next to it, they built one that was wooden in the structure, single pane glass, plants right next to the building, mulch, and they lit them both, the mulch areas on fire at the same time. The hardened home didn't burn at all. The other one went up in 15 minutes, completely burned to the ground. So we learn a lot about the science from that. I don't know where I was going with this answer because, I mean, there's topics there that we learn about defensible space at this meeting. We learned about the importance of your local fire department and how quickly they can react, and it was really terrific, and it really added to the level of our knowledge.
They do a great job of actively the negative effects of a fire. And the lady over here with the 8921 zip code, that area is broad and its fuels sources are locked up. You know, income village, there are also the trees, after they actually catch on fire, the risk probability of that is great because they have people who run out of house. Well, we can ArrowCreek with 3 native trees in the entire thing. Everything else about 5 feet vertical from the ground with the homeowners. Yet the majority, the far majority of all the homes built are stucco exterior concrete tower. It's a concrete box. And we all have sprinkler irrigation systems. We have our own water applications currently, the elections for about schools. And the original fire here in 2000 spread to the north because that's up there in the wind. And at that time, there was nothing way to build that. So our risk, our daily risk that we carry here is managed. But 89511 is a huge geographical area. Homeowner association and not homeowner association, which is not how it's been managed to out. So looking at the probability of a student identical insurance company has claims, like the Gulf Coast of Mexico, Florida, Carolina, Coast Beach, really hit by storm hurricane. I don't even know why they have insurance, and I lost it. I don't know why insurance is here written there. There has to be some assumed risk that you have in there. But you know what ultimately affects these insurance rejections and coverage is the cost of our managing our homes, and also the marketability of the potential resale of our homes. We can't just create an environment where we're protected but scarce control. And I would like to suggest that the FEMA model is very specific to the plot where you're inside a flood zone or not. And I know that's what I know it's very, very long, a lot of money and time for it. It might be something to suggest to the insurance industry. Selfishly, at least how it affects us in our lives, that it's a starting point to assume problems, therefore proper provisions for insurance companies.
I was taking a break from the DNC last night and flipped over to watch the Giants game and the very start of the game. And I was fascinated by a camera shot well up above the ballpark, and the game was in San Francisco, of the prevailing winds and where they're going. At the ground level, it's a whole lot different than at the mezzanine level, which is a whole lot different than, up at, 150 feet above it. If we could do that just on a whim on watching a baseball game, why can't we do something like that to say, what's the prevailing wind through Incline Village? Where is the fire going to come from? And what do we need to do to protect? I knew where I was going with the IBHS story now. One of the things that they showed, actually a couple, was two conflagrations. And one was Lahaina, and where it started and how it spread, and how that there were certain fire breaks that could have been put in that weren't, that allowed the fire to spread. And then I think the other one was, I want to say Paradise, but I'm not sure it was Paradise, maybe another fire in California. But they also indicated how, some of these fire breaks had been put in and had stopped this fire from spreading through a very small neighborhood. So I think, modeling based on the FEMA maps, I think is a great idea.
Yeah. One of the greatest and the government I know it's complicated, but the feds and the compensation and the, commercial, great high school thing. But perhaps maybe their office could, talk to the governor, because he has control over the national guard to some degree, and maybe there's a decent job on behalf of the community. So, because those guys could do a quick wrong or go off, and do like that 767 rock part and have that out. But that's.
I appreciate that, and I know that the governor's office is very interested in the issues around wildfire. When we get a chance to talk to them, we'll bring that up.
I used to say no, it's good, but I'll leave on coverage. Then I realized I will say probably coverage. So I will give the duration, I'll compress with it because think about that for the insurance, you made a profit. It's just the insurance company's blood business. So they're not asking for grants or just the other things. Yeah, that one is about homeowners insurance or culture. Probably have no idea what else. And when you I'll tell you right now, like so you know that's very complicated business. And insurance companies have you got action. So you're trying to do the right kind of process.
That's a great observation, and I think the point you hammered home is to make sure you know what you got, what your coverages are, where your gaps are, and take action. But work with your insurance professional, your local insurance professional. I think that if there's one message you take away from this is exactly that. Kathy?
I want to move to the one. There is nothing requiring. There's nothing requiring insurance companies to use the same model. They can use whatever model they want. So that doesn't make sense to me in terms of then you get your insurance bill based on one model, and if you go to another insurance company, it could be a different cost because they use another model. Is there any rhyme or reason why they wouldn't be able to use the same model? Other than,
Everybody get that? The use of the models? That's a very interesting point. And that's kind of what keeps us up at night is insurance companies will do what they can to make sure they make a profit. And they will input stuff into the matrix of this model and have it spit it out. Now, these models are not inexpensive, so I don't think they shop from model to model, but we've heard of some carriers that have, 2 or 3 different models that they use. But then the insurance companies then can plug in their own data. So they'll plug in the data about your home into a model, but it might be the different data than company B over here is asking for. So you may get a different quote from B than you do from A. A might say, yeah, no thanks, we're not taking that. B will say, yeah, we'll take that in a New York minute. A lot of it depends on the data that gets put in and how they utilize these models. Now, we work very closely with the National Association of Insurance Commissioners on reviewing what these models do. If companies use these as part of their underwriting process and they tell us this, then we have the ability to look at making sure that they use these properly and accordingly, not to disadvantage consumers. One other thing that we've recently done at the division is we adopted a bulletin earlier this year on the use of artificial intelligence. And basically it directs insurance companies saying, if you're using artificial intelligence or anything that looks like that, machine learning, take your pick, do so at your own peril. If you disadvantage a consumer through the use of AI, we will hunt you down. Problem is, we don't have the expertise yet to understand fully how these algorithms and how this modeling completely works. We're getting better, we're getting smarter, but we're not there yet. But that's really an interesting question on how these models work. And there's, to my knowledge, I think there's 4 or 5 companies that are selling models now. But because, pretty profitable, I would sure that there is probably more coming into the marketplace as we speak.
The insurance company guy just left, right? I was gonna say, what are the typical gaps that?
Hold on.
Okay.
One thing to that.
Okay, well, I'm just kind of curious, you mentioned, sit down with your Shakespeare, what kind of things are you looking for, gaps, like not enough coverage for your personal things, for your car, for your house, is there something to look for on that, so know what to ask?
In honor of Phil Donahue.
Thanks. I'm in insurance with a answer your question specifically. Homeowners policy has a variety of focus on coverage A. That's your primary coverage, and that's what we were talking about. Someone that said, "Yeah, I'm underinsured." That's the single most important coverage to look at, because over time that value gets adjusted by just small incremental inflationary factors. If you don't go back and review it, and you've been relying on that for several years, you're slowly getting over the line. Look what happened with COVID. Materials costs, everything went up. We're not going to rock the break. So, if we were to find more, we're going to look at that and make it easy to look at that. I have a couple other comments. I think Kathy was, you were talking about, when we start back here, the gentleman was asking about the models. The insurance carriers, what they look at when we're out working, they're looking at a couple of factors. There's a FEMA model they reference that looks at environmental impact at a zip code level. They don't drill it down to an address level. And they use that to determine the frequency and probability of wildfire. And there's a wildfire story. The other piece that an insurance carrier looks at is what's called an ISO score. And that's related to your specific address. And what that score is evaluated is the resources to come by for that address. They're evaluated their resources, their staff, their training, how far away is the fire hydrant, how far is the response time for the fire station. So they're kind of all using models to look at that, but they aren't perfect. But they're trying to use those to determine what the risk is. And then back to that, we were asking about modeling. Commissioner Kipper is correct. There are a handful of models that the carriers use. But the step that the other piece that impacts why is it that they're so different between companies is that each company has a different risk pool. So one company either may insure a lot of properties and they have to evaluate that against what the models say for the risk, and they come up with their own determination of what that's going to cost. You may go to another company that has one house in the entire community, and they're willing to accept risk. So they're looking at it and saying, well, they're interested in this when market conditions kind of get in, and they're able to say, yeah, I can give you that policy and it costs less. So it's not necessarily the models themselves that are standardized. It's a compilation of a number of factors. And a lot of it goes back to the risk pool of the carrier that they have to balance out their actuaries are doing not only for risk, but also for what's my exposure. Like Commissioner Kipper said, we have 4 or 6 houses on the street. That one carrier may not want to insure that over again. Or if they do, they're going to charge more for something different. Say my risk profile for that property is different.
I should be so clear. Thank you.
I don't know, this is huge.
I wouldn't say every time you see a drone is an insurance company, but insurance carriers do use all the available technology. So it might be a drone. Certainly, satellite imaging is popular, but they have ways. You know, it used to be that you'd have an agent come out and walk the property with you, and they would identify these things. That's not so much. I mean, it happens still. The good agents, good producers will take that interest, but yes, short answer. If it's a drone, could be an insurance company evaluating your property.
So used to be that it was periodic. Commissioner Kipper's right. We used to go out and we would monitor the property. What's called periodic. We would go report on that. Now insurance companies are employing a few different methods. One, you can pretty much count that they're going to send somebody to do an inspection. An inspection and the lease standard is going to be, they're going to write by and they're going to take a visual evaluation of the property. As old as they said it was. They're now starting to employ self-inspection where they'll send you a link, use your cell phone, walk around your property, and they're employing average and everything. And then they are using drone service. Some large carriers, there are companies out there. One of these drones that rotate information through a neighborhood, and then they're able to get that back to an insurance company to see is there rules that are on the roof. What's the condition of the roof, whether it's on the property or the concerned. So the short answer is not all the time, but they are using technology, and every time you see it on, it's not insurance, it's not that widespread, but it is technology that's being used. We are seeing it. Agents now are getting denials of people that have gotten away. We're going back on what they have to challenge. And 7.3% of the roof is age. When we go challenge it, we find out that there's not going to be no history. That's a shadow on the roof. We've got to return it, but they are relying on that technology.
It's almost hard for me to be proactive as a community, but I think that the fire safe and principles based things that we at least need to try legislation that help us maybe gain a little advantage on the pricing of the insurance companies. We don't want to scare the insurance companies away by two pieces of legislation, but I think it might be pretty easy for us to accomplish it with Senator Lisa representative of incline and the home development partner, and then someone from the registered owner. I think that would be open to sponsoring a piece of legislation, and I'll talk with Kathy more about this, but I think that's one small thing that maybe we could accomplish. And legislate the bill drafts have to start now for the 2025 legislature that starts in February. So they are drafting the pieces right now. And when those pieces are drafted, it goes to the agency. Governor's office will go on. So it may be a good type of government bill that we can get through. So that's a suggestion.
You have been a terrific group to visit with. Thank you for all the tough questions. If we don't get tough questions, I don't think we make progress. So I truly appreciate the opportunity to be here in front of you today. Thank you. Let's make sure this is not the last time. I'd love to come back 3, 4, 6 months from now. We start the session 1st of February. It'll be certainly the issues around wildfire are not going to be the only insurance pieces that'll be under discussion. But we'd love to continue this dialogue, share with you what we're working on, and let's build a better future. So thank you very much. Thanks for having me.